Hey Desert Life family, so mortgage rates topped almost 6.5% this past week, and with the Feds going in hard on inflation, mortgage rates will not come down anytime soon. Mortgage rates could even top 7% or higher. Well, there goes home affordability, right? Unless you buy down your rate, but will buying down your mortgage rate work in your favor? Well, it all depends on how long you plan to stay in your home. Let's first talk about what buying down your mortgage rate means. Mortgage rates can be reduced by buying mortgage discount points, and do not confuse this with origination points. Mortgage discount points, which I'll refer to as just discount points, is a percentage of your loan amount. One discount point equals 1% of your loan amount. So let's say, for example, you have a loan amount of $500,000, then one discount point will cost you $5,000. And keep in mind, this has to be paid up front. Now, it's easy to think that one discount point decreases your interest rate by 1%, but it does not. It reduces your interest rate by 0.25%. So let's say your lender locked you in at an interest rate at 6%, and you wanted to buy down your rate by one discount point, then your new rate would be 5.75%. So now the big question is buying down your rate worth it? Well, let's do the math. Now, this table is based on a loan amount of $500,000 with a 20% down payment. The monthly mortgage is an estimate, and it does not include taxes and any HOA fees or home insurance costs. So as you can see here, 1 point saves you $64 a month, 2 points saves you $127 per month, and 3 points saves you $189 per month. Now let's break that down. 3 points would cost you $15,000. It would take you about 7 years to break even on the $15K that you had to pay up front. So basically, you will not see the return on that investment for about 8 to 9 years. Now, do you want to pay this much up front to see the reward years later? Well, there is a chance that buying down your rate won't cost you anything. For example, if the seller is offering monetary concessions, this may be able to be used to buy down your rate, or if your lender has a program that helps you get a lower rate. Now, speaking of lender programs, see if your lender offers a 2-for-1 buy down rate. Now, a 2-for-1 buy down rate is a temporary rate buy down that lowers your mortgage payment for the first 2 years. Now, the rate is lower by 2% during the first year and by 1% lower during the second year. Now, after the second year, the loan reverts back to the original rate. However, you do not need to requalify for the loan. This is an automatic process. Now, this is a great way to buy a house in today's market with a lower rate. It's hopeful that by the end of the second year, rates are lower than what you locked in, and if this is the case, you can refinance. Reach out to your lender to get the details. Now, I also want to note here that there are a lot of new home builders offering incentives that include lower interest rate as well as monies that can be used towards closing costs. Okay, so if you're looking to buy a new build, you may want to pursue this. But regardless if the cost is coming out of your pocket or if it's someone else footing the bill, we still need to ask this question: is buying down your rate worth it? Well, there's really no direct answer to this because everyone's situation and everyone's bottom line is different. So here's what I recommend. Run the numbers. Find out how much you will save and how much it will cost you if you decide to buy down your rate. Now, there's a chance that it may not cost you anything. You can ask your lender to help you if you're not sure how to go about this, okay? Now, another perspective to consider is, would it be more beneficial to use that money elsewhere, like for example, towards your closing costs? And then lastly, keep in mind that you can always refinance, like as I mentioned earlier, when rates are lower. Now, you know that we can't time the market, so no one knows when this will happen, and it may be a while before rates decrease due to the condition of our economy. So I know that I covered a lot in this video. So if you have any questions about anything I discussed in this video, or if you have any questions about the Phoenix market that I can perhaps discuss in my next video, drop me a line. Just see the link below. I'm Renee the Realtor. Thanks for tuning in, and we'll see you next time.